From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming August 6th Forex session. This is the euro dollar pair, as you can see in front of you. And I have it zoomed down a little bit so that you can kind of get a feel for exactly what's going on longer term. We have seen quite a bit of bullish pressure, and I'll go ahead and zoom in a little bit here, over the last couple of sessions. But what I found interesting was at the end of Tuesday's session, looks to me like we're finally starting to see a little bit of weakness again, and this isn't quite enough to say, hey, this pair is about to fall back down, but I can't help but notice that the hammer from the Monday session, which looked very supportive, but I also mentioned that there is a lot of noise between here and, for lack of a better term, I'm calling it 127, just did not look healthy, like an area that the market was going to chew through without some kind of major catalyst. If you look at the Tuesday candle, that appears to be true, as we have formed a shooting star. You can also make a little bit of an argument for this being a flip, if you will, support and resistance in this pair. So there's plenty of reasons to think that this could go down. Interestingly enough, the bottom of this hammer is what I see as a signal. It's a sell signal, and I also see it as essentially carving out support at the 123. You can see that it did offer support or resistance previously. So now we have to see whether or not this holds up. Looking at this chart, a lot of people will look at this and they'll say, hey, Chris, check this out. You know, we broke out of here. Now that should be support, which is true, but it is a downtrending market overall, and this is a much larger and much more significant area because of the 125 than a number like 123, which will be minor at best. Because of that, I think that the area above has more weight. However, for safety's sake, you can wait till sub 123 and really begin to sell again, and that should have us racing back. We never really reached it, but back towards the 120 level. I think we came about 20 pips away from it. Looking at this chart, there is one other thing to consider that I don't have drawn yet, but from the fall, most recent fall, you can see that we stopped on Tuesday right at the 61.8, which is, as people call it, the golden mean Fibonacci ratio. So having said that, and the fact that the trend's down anyways, there's plenty of reasons to think that this was simply a short covering rally, and perhaps we will load up on euro shorts again. Sub 123, and I will be selling.